maybe just as a start, it'd be really good to get a show of hands of anyone who is familiar with Elemental Altus as we are today. And if not, I can... Okay, that's actually a really good start. A quick bit of background Joe touched on. So we actually merged as Elemental with Altus. It closed in August last year. A quick background on Elemental. We started in 2017 privately, listed in 2020 during COVID here. Unfortunately, couldn't get over to Canada till the end of 2021 in person. Then had a hostile takeover launched as us as a surprise Christmas present in 2021 that didn't go ahead. And coming out of that in May last year, we announced in June a merger with Altus. And that's what closed in August, so all pretty recent. So when you're looking at this today, this is the first presentation we've given as a combined company. And I think just a bit of background, Joe touched on it. We both had a royalty side to the business, but Altus also had something which is pretty special, which is a royalty generation arm that they had done for years, and I think become the preeminent royalty generator in Africa. So with that as a bit of an intro, one of the themes I think has been very prevalent in the royalty space in the last 18 months has been M&A. 2021 will go down as the highest number of royalty companies in the mining space. And as of today, there are 8 less royalty companies. And all of those 8 M&A transactions have been in the sub-billion-dollar space. So when you look at it today, we have peer-leading revenue in that sub-billion-dollar space, as you can see there on that slide. And the circle's in the middle of the market cap. So in terms of revenue to market cap, we're incredibly strong on that metric. And if you look at our shareholder base coming out of the merger now, we're about 160 million US market cap. We have about 20 million US revenue for 2023 coming in. We have a very institutional shareholder register. About 70% of the shareholders are institutions, which for a company our size is unusual. The largest I'll just touch on is La Mancha. And for those who aren't familiar, it was a family office, effectively, Egypt's richest man. And they have been the cornerstone shareholder in building Evolution Mining in Australia into a top 5 ASX miner. They're the biggest shareholder in Endeavour Mining, building that into a top 10 gold miner globally. And they're the biggest shareholder in us, and put another 27.5 million in December, just gone. So where does it leave us? We announced in December a credit facility with CIBC and National Bank. And I think one thing that's really interesting and hugely underappreciated in terms of cost of capital is we now have a credit facility with the banks that only the plus billion-dollar royalty companies have. And that is a function of our portfolio and the producing diversified revenue we have. So as of today, we have 30 million drawn on a 50 million credit facility. We have 17 million US cash in the bank. We're cash flow positive, and we can fund the royalty generation within us as we go forwards. Quickly, when I said diversified and de-risked, this is a great slide that every year has got better. We have 11 producing assets. That is with 11 different operators and across 7 countries. We're gold weighted, and if you look here on the map, gold and copper are our 2 major commodities. So we're about 40% weighted towards Australia. But we are a really well diversified and royalty company with a lot of actual revenue and cash flow, which sets us apart from any of our peers and has done since day one. And ultimately, it's probably the reason we attracted a takeover. It's just at a price that shareholders overwhelmingly did not want to accept. So where does that leave you as an investor looking at the royalty space? I think one of the things a smaller royalty company can do much better than the bigger royalty companies is we can actually scale up fast. And the royalty space, the royalty business model, the ability to scale up is really critical. And you can see here till 2022, the dark blue, those are actual revenue numbers announced. And then that's consensus for the year end for 2022 and then 2023 going forwards. So we have grown the revenue on a over 80% compound annual growth rate since we started in 2017 when we were $1 million startup, and we had to give away half of our first royalty just to get it off the ground. And I can't tell you how many times people said, you can't buy producing royalties. It's a holy grail. Everyone in the royalty space wants it. And you certainly can't buy producing precious metals royalties. And we have done that every single year since we started. We started this at 27 equivalent share price. So we have added value in share price terms every year through to today. I think we're a 125 share price. But also, really importantly, and this slide just touches on it, is we have increased the quality of the royalty. And I think the mine life there talks to that a bit as we have gone. So just quickly here, we've got a bit under 5 minutes left. On a price to revenue, I think we're trading at under 10 times revenue where we sit today, and under 1 times on NAV, which for a royalty company with a portfolio of 80%, more than 80% producing royalties, that is cheaper than you could buy the royalties individually in the market if they were in a sales process. And that, I think we're going to come on to some of the royalty generation side that has a lot of latent value in the portfolio. So here, the 3 cornerstone royalties we have: Karlawinda in Australia, Caserones in Chile, and Wahgnion in Burkina Faso. And as an example, these 3 royalties paid us about $6 million US in the first half of last year, announced numbers. And these are on reserves only, 12-year, 17 years, and 10-year plus mine lives. So these are assets that, in our view, are going to be multi-decade assets. And if you look at it fast forward 5 years, and you say that these are paying us $12 million a year, these assets have probably paid us 60 million US. And we would hope that they have the same mine lives that they do today. And we don't have to put another dollar into that. Another couple of examples here of other royalties. Bonacro, Ming, which is the first stream we did as opposed to a royalty, and that's in Canada, in Newfoundland, the Mercedes mine in Mexico, and Amancaya in Chile. And just to give you a flavor there of sort of the diversification across the portfolio. This slide is a new one we added, but I think it's really important just to give a few examples of transactions that we've done where, as time goes by, we can really start to demonstrate the value that we have added. So the first one, Quale, the first royalty that Elemental did, we paid under $1 million for it. We've been repaid $2.2 million to date. Post-tax, it is still producing, and current valuation of $1.3 million. Mount Pleasant, you can see there. Mercedes, that only just started paying us in July last year, but again, was a really good transaction. Amancaya, Wahgnion, and Karlawinda. And I think going forwards, every time, every quarter, every 6 months, every year, we come back and look at this slide again, I think it's going to be even more powerful example of why the business model can create, the royalty business model can create so much value. And it's not easy to do. We probably turn down 95, 99% of the projects we look at. So it's really hard to sort of identify the good ones, and you've got to be very persistent and dogmatic, but there are some really good opportunities out there. Optionality on the portfolio. So I love this slide, and I think it just highlights here. We now have over 7.5 royalties, over 7,500 square kilometers, where other people are exploring at no cost to us. We have 3 examples there: Wahgnion, Mercedes, and Caserones as really material operating mines, where we have royalties over the whole land package. Maybe if I just use Wahgnion as an example, Endeavour have publicly stated that by 2025, they intend to add, 2 million ounces in measured and indicated resources at Wahgnion. And when we bought that royalty, it probably had about 2 million ounces. So by that stage, 2025, we're probably almost repaid on Wahgnion, and it will have a resource that's double what it was when we bought it. And that's a great illustration of some of the value. And they're spending $35 million over the next couple of years on exploration just on Wahgnion. And we have 1% royalty on everything they mine there, uncapped forever in the future. We've touched on a few of the royalties, but we've got a pretty substantial portfolio, a lot of which came from Altus on the exploration side as well. Project generation, royalty generation. We'll only look at 2 projects, assets we have quickly here because of time constraints. This is in Mali. It's 670,000 ounces, mostly oxide. It's adjacent to the Sadiola mine, and the last public resource on that, it's now a private company, Orion, a major shareholder. Last public resource was 7.7 million ounces. It was previously with Anglo and Iron Gold. It was a tier 1 producer, and we will look to realize value from this asset going forwards in the best way we can. but it was a great example of something where we were able to get a project and do low-cost work on it and advance it into a position where it has, in Altus, it had a 150 million MPV as of August last year when they did the PEA. Egypt, where Joe mentioned, we're really pleased to get him out there next month. In Egypt, we are the 4th biggest license holder after Barrack, B2, and Centamin. If you look a few years back, I think Mark Bristow said that Egypt was the one country in Africa that he was really excited to see open up. And how did we get those licenses? A lot of it comes through our largest shareholder, La Mancha, with an Egyptian background. And so we have just under 2,000 square kilometers of ground in Egypt alone. And we have 2 field teams on site there now. And we're progressing those projects as fast as we can, at the same time as looking to bring in partners, JV them out and maintain a royalty. And so we're going to keep that royalty generation arm going alongside the royalty acquisition arm. And I think that really makes us stand out, but it also offers a really exponential value in that side of the business that probably gets almost no value today. So thank you very much. There's a whole presentation here, and we do a Q&A later, so we can cover that off. But thank you otherwise.